Hello. Hi, MJ.
Oops, hello. Hello, Randy. Glad to be
Hi.
here for the
Hey,
first
good
time.
evening, guys.
Hopefully not the
Yeah.
last. Hopefully not
No,
the
no, no,
last.
no. Definitely won't be the last. How are you, man?
Good. Just took some coffee so that I get ready for the session because this is an industry that I have no experience in. I've never really looked
Yeah.
at it. It has always been a cyclical, commodity-based
Mm.
companies. But we were chatting beforehand that these sort of companies are not very well known to Malaysians.
Yeah.
So looking forward, man.
Yeah, honestly, me like yourself,
Hmm.
it's only about, I would say, this year, which I started to realize that Malaysia is actually quite interesting because there are actually a few companies, which is in all this basic material space, right?
That's right. That's right.
Of course, everybody knows press metal, for
Of
instance,
course, of
and
course.
perhaps a lot of people know like the steel industry, your Anju and the likes of those,
Yeah, that's right.
SS. Yeah, but what people don't really realize is that actually there are a few other companies within this space. And when we saw like in the beginning of the year, or actually it started from last end of last year, I think, when a lot of
Yes.
industrial metal prices have just started to like skyrocket,
Yeah.
and then only these companies started to like creep out and garner some interest, right? So that's why, for instance, I only found out that Malaysia has this company called MSC, and
Hmm.
of course, MSC is basically like a tin company. Um, so we have MSC, and we also have this other company called PMB Tech.
Yes.
It's also I mean like it's also owned by the Press Metal brothers, and so what we have right now is actually we have Press Metal aluminum, and then we have MSC on tin, and then we have PMB Tech, which is doing silicon metal. Again, a very important sort of like raw material. Let's just call, even for instance, like the recent semiconductor rally, silicon metal is an important ingredient for that, right?
Yeah.
So, and then I
I
think
mean,
we
that's why they
even
call
have
it Silicon Valley, right?
yeah,
Right.
and yeah, correct. And even I think, correct me if I'm wrong, but we also have like a gold miner, right? Like
Well, yeah, yeah. I think,
Barves or something.
yeah, yes, yes, correct.
Yeah.
Actually, when we think of commodities in Malaysia, we tend to think of maybe oil and gas, or natural
Yeah.
gas, or even palm oil, right? And
Yeah.
the metals actually don't get a lot of love. And
Yeah.
I can't remember on the top of my mind, but it's something like it's definitely in our top 10 exports for these
Mm,
metallic metals, So there's a specific word for it. I can't remember what it was, but
yeah.
there's not enough love. And I think the result of people not paying attention is that people miss out on that January boom of the MSCs of this world, right?
Yeah.
Because there's no attention paid to it, not as much.
Correct. Correct, correct. And even for instance, people talk about which companies. I remember there was one time there was like some image of like electric vehicle and whatever, and all the sort of like basic materials that is related to it. And what about copper? What about nickel? All this sort of thing. And suddenly
Yeah,
everybody is starting to talk about a lot of so companies like Tawin, for instance, when it comes to copper.
wires, right?
Yeah, but again, they're not a mining company, they're not a smelting company, but the company that we have here today, right? OM Materials, OM Holdings.
Yeah.
It's also, it's very interesting because number one, they mine manganese ore, and I personally also had to look this up, right? Like what is ferromanganese, what is manganese alloy, and all these things.
FESI, MN.
Oh man, I mean I totally failed my chemistry last time, so
Oh,
it's
you fail. I drop chemistry. So
yeah, so it's not something that I'm very familiar. But thankfully we have the expert here today with us.
yep.
Oh, just maybe one last thing which is very interesting about this. I'm not sure if you know, but OM Holdings is actually the first sort of like cross listing between ASX
Yes.
and Bursa. And you know uh if you guys, I mean, because I used to come from CIMB, and I used to do this sort of like risk arbitrage, or rather like an arbitrage trade. And one of the sort of like opportunities that I used to look at last time was basically the arbitrage opportunities between two exchange. And actually, if let's say you guys are very interested into this, there is actually an opportunity for you to what we call like take advantage of between the two exchange. MJ, do you know how to do that?
No, man. I'd love to know.
Okay, but I mean, just the very basic of it, right? You see what is OMH price in ASX, you see what's the OMH price in Bursa Malaysia, and you sort of like compare it against the Aussie dollar ringgit, and sometimes there could be spread. And I remember when it was first listed, right, the spread was like insane level. I think it was 50% or something like that, which means,
What?
right, if let's say you bought OMH in ASX and then somehow you're able to transfer it or transfer your shares over to KL, and you sell it, and let's just say there is no price movement in that particular transfer period, right? You're able to basically buy and sell immediately 50% gain.
How
It's
long did the
insane.
arbitrage, did the spread last for, that 50%?
I mean, it managed to close the gap, you know. But yeah, I mean, it's just there. So something that everybody can try and learn and try and understand further, you know. Yeah, but yeah. So I think without further ado, I would just like to bring Adrian. So Adrian is from OMH, and we'll be speaking to him today. Hi, Adrian.
Hey, Rondi. Hi, MJ. Thanks for having me here tonight.
Yeah, thanks for sparing some time with us. So where are you? Are you like in Australia or Malaysia or Sarawak?
Yeah, no, I'm just in boring Singapore. So that's where, OM Materials, which is actually the sort of HQ is located.
Okay, interesting. So when was the last time you traveled to maybe say Sarawak or Australia?
Well, that's a really good question. I think, let me see. So I've been stuck in Singapore for probably close to 2 years now. The last trip, I think, was in Q4 2019, I think, was the last trip to Sarawak, and then Q3 to Australia, where our mines are.
Okay.
But yeah, since then, I think we've just been sort of working remotely.
Right. Okay. I mean, again, it's great having you here. Honestly, myself and MJ, we have a lot to learn when it comes to industrial metals and all that. So yeah, I mean, to the audience, do not be sort of shy to ask away all your questions. We will try and do this presentation in a little bit more informal way, where Adrian is going to present a little bit, and then we're going to ask some questions and so on. And there will be like a bunch of other questions that we'll ask at the end of the presentation. But yeah, maybe Adrian will present a bit and stop, and present a bit and stop. Yeah. So Adrian, over to you.
Yep, sounds good. Thanks, Randy. So actually on the screen here, you can see our main plant in Sarawak, Malaysia. So I thought that's quite a nice aerial capture. Next slide, please. Yeah, so okay, there's quite a lot of material to cover tonight, actually. So I'll try to compress the presentation and try to do more of Q&A. But suffice to say, I think OM Holdings as a company, we are a manganese ore and ferroalloy company, and we try to do everything in-house. And so it's a completely vertically integrated process. For mining, right? It's literally we take the material from the ground, take that to smelting, which is processing, the middle step, and then finally we sell it in a distribution process. So I think Rondi introduced this ferroalloy space actually is very, very niche. The plant that we have in Sarawak is actually, I think, within the top 10 largest plants on a sort of manganese and silicon combined basis in the world outside of China. And definitely what we have in Sarawak is sits quite firmly in the lowest cost quartile. I'll talk more about the hydropower and the plant. And for now, I guess, our operations span the sort of traditional manganese ore mining countries like South Africa, Australia, and the rest of our presence really is in Asia, where, that's where our customer base is. Next slide. So we just like to start by jumping straight into all the operational units. And from left to right, you can see that it's ordered from sort of upstream to downstream. So starting from the left, right, we have exploration and mining. So Bootu Creek, Australia, that's 100% owned mine in the Northern Territory, output 800,000 tons per annum. I'll talk more about that later, but actually it's quite an old mine, so it's near the end of its mine life. Then we have 13% of the Chippy Boa mine in South Africa. So this is held via a joint venture with our partners in South Africa. And for those of people who don't know, so manganese ore is usually found in the southern hemisphere. So countries like Australia, South Africa, or Africa at large, and South America, that's where manganese ore is usually found, hence our two assets. And the Chippy mine is actually one of the largest mines in the world, and definitely one of the lowest cost mines in the world as well. And so you can see the output, 3 to 3.6 million tons per annum. It's much larger than Bootu Creek mine in Australia. So that covers the entire sort of mining segment. Moving on to smelting, right? We have our Qingzhou smelter in China. That's actually the first smelter, our first foray into smelting, if you will. In the past, we used to be a pure sort of agent or distributor of these materials, and we got our feet wet building the plant in Qingzhou. But that's not a very big plant. Sorry. So you can see that the manganese alloy, so ferroalloys are these the finished products from smelting. It's only about 80 to 95,000 tons per annum. Whereas if you look at Sarawak, manganese plus ferrosilicon combined, it's something like 450 to 500,000 tons. So I think without a doubt, today the star of the show for the company, for OM Holdings, is our plant in Sarawak, and hence the dual listing, moving from ASX over. Sorry, not moving over, but having a listing on Bursa Malaysia. So with that, that completes the second stage, and the final leg is really just distribution, right? So what distribution is we have so many different operations. How do you link them up and optimize logistics, and how do we do sales to end users, so on and so forth. So in a nutshell, that's operations. Actually, it would be a good time to take questions, if there are any, on the operations.
Actually, there's a question. Yeah, so Nick here is actually asking. By the way, Nick, this is not a stupid question. I think a lot of people will be having the same question, right? So, what's the difference between sort of like manganese ore and manganese alloy, and what's the difference between silicon and ferrosilicon and stuff? Yeah.
Yeah. No. Please ask ahead. So manganese ore is the raw material for manganese alloys. So ore is what you get from the ground, and alloy is what you produce after smelting. You're melting it with coke and so on under high heat, and you obtain the alloy. So likewise, for silicon and silicon alloys, it's the same analogy. But in the case of silicon ore, right, it's more commonly known as quartz, which is actually what you see in the background in the picture.
Okay.
So moving on. Yep. So here we have actually the main product. So the leftmost is manganese ore. So as I just explained, that's what we get from the mining process. And manganese is actually the fourth most consumed metal, behind metals like iron, aluminum, and copper, which most people know. You don't have to Google. But for manganese ore, I think it's quite niche. Right now, today, steel accounts for over 90% of the manganese ore consumption. So, if for people who know steel, when you look at the steel spec sheet, right, first you have iron, then you have the carbon content. Then after that, the most common elements that people care about are manganese and silicon, right? So that's what the products that we produce are used for. It's used to sort of toggle and adjust this final elemental content in steel products. So, the remaining usage of manganese, it's quite diverse, but I think something that's growing right now is the use of manganese in battery space. So that's still a very small percentage, but it's something that a lot of people are looking at. So moving on to the finished products, right, the two alloys. So we have the manganese family of alloys and the silicon family of alloys. So manganese alloys, like its name suggests, comes from manganese ore. Both of these alloys cannot be, there are no known substitutes for them in the steelmaking process, right? So, one analogy I think we used when introducing the company is, it's like when we sell these alloys to steel mills, right, it's like selling salt or soy sauce to a restaurant, because it's such a small additive, but you can't really survive without it. So you can't make steel without what we're producing. So I won't go over the technical details. But right now for our plant in Sarawak, we have 16 furnaces. So it's sort of a modular line. With 6 furnaces dedicated to producing manganese and 10 furnaces dedicated to silicon.
Yeah, sorry, Adrian. Maybe let me just pick one of this question, right?
Yep.
So basically, yeah. So Shafiq is asking on this is just a basic usage of manganese. He's actually asking, is manganese gonna replace cobalt for EV battery?
Yeah, so this is one of the very hot topics this year, I think, and a few sort of car makers or people in the battery space have come out with different combinations. We're not really an expert in this yet, but I think because it is sort of tangential to what we're doing in the ferroalloy space, that's what we'll be looking at next. But yeah, I can't say for sure right now. In the years to come, what will prove to replace what in batteries.
Right. And I think Nick is asking something which you're going to answer right after this, is whether you sell your own manganese ore to yourself for smelting. Yeah.
Yep. So that's perfect for the next slide, I think.
Okay.
Yeah. So I think this because of the way we are structured, right, the vertical integration, it's sometimes quite hard for people to visualize the value flow through the company, and hence the question from Nick, and this slide. So if we go from left to right, that's how material enters the company, and on the rightmost, that's our sort of final sales. So if we start from the right, then you'll see that we have manganese ore sales, which is about, I think, 20 to 30% of total revenue. That's the sort of red arrow, followed by the blue arrows, which are the alloy sales. So manganese alloy is the second arrow, and third arrow is ferrosilicon, which is the main alloy for silicon. But how does manganese ore enter the company, right? If you look at the top left corner, so we have the mines there. So Bootu Creek is a 100% owned mine in Australia. Obviously, so once we produce it, that enters the sort of very flow. We also buy 13%, so that's our equity share of the ore from the Chippy mine. And we also buy ores from other mines. So these are sort of pure third-party purchases. So that forms the total manganese ore book, so to speak. Actually, a vast majority of that ends up as sales. That just flows out, and we sell to end users. But part of that gets channeled down into the production of manganese alloys. The reason why it's so convoluted is because, like any sort of smelting process, what you get out of the ground, right, is you can't really control the elemental content. You have to keep optimizing and blending in order to reduce your power consumption during smelting, in order to achieve the specs that you want in the final product. So I hope that that answers the question, the previous question. But yeah, there's a lot to unpack here. I mean, we can come back to this slide later on if there are questions.
Okay.
Next slide. Yeah. So okay, this is a picture taken at our mine in Bootu Creek, Australia. So, like I said, this mine is quite old. I think it started as a joint venture with a mining major. Then the size is just nice for us, but maybe too small for them. So we took over this mine, I think around 2003 or 2004, and brought it into production. So it was never meant to be a big mine, but for some reason, we've managed to extend its life all the way until now. But with the ore prices today, and actually with freight, right? Freight is a big part of how bulk material is traded. We have decided actually this year to close the physical mining part. So actually blasting and then digging hard lumpy ore from the ground, right? So we've decided to stop that. And something that we've sort of been working in the last couple of years is a ultra-fines plant. So what that means is, when you produce ore, you get just rocks, right? That you sort of put through a media separation plant. The denser material, that's the ore that you want, gets selected, and everything else is sort of what we call tails, is stored somewhere. And so there's this technology where you can take the tails, it's very fine material, pass it through laminar screens, and then try to recover the very, very fine bits of manganese ore. So that's actually what we've been working on, and sort of trying to optimize that plant at site, and as well as doing some kind of rectification works on the plant. So that's our mining operation. Next slide. So moving on to smelting, right here you have a picture of our smelter taken from the inside of our plant in Sarawak. I won't go over the details, but I think I've touched on this. Our plant in Qingzhou was the first foray into smelting. It's just manganese alloys, whereas OM Sarawak, that's our sort of the crown jewel of the company. Has 16 furnaces, and we produce both silicon and manganese alloys. Next slide. Okay, so this is another aerial shot of the plant, and you can actually see the workshops, right? There are 8 of them, and each one houses 2 furnaces. So we fully ramped up everything in 2018, after commissioning from 2014. Next. And this is a nice shot of the Bakun Dam. That is the reason why we're in Sarawak in the first place. I think after China levied export tax on ferroalloys and started changing the whole market landscape, we've been looking at different locations to put up a plant, and I think Sarawak was a perfect location with the industrial park. But I'll talk more about that later. Next. Yep. So the Samalaju Industrial Park, right, which is where we're located, it's also the industrial park where Press Metal, PMB Tech is also located. And I think the reason why so many companies, so many industrial companies are there, is because of the green renewable hydropower. As you saw in the previous slide, there's a installed capacity of 3.3 gigawatts of power from Bakun and Murum dams. So I think for this audience in Malaysia, there's no need to introduce where Sarawak is and so on and so forth. But suffice to say, I think it has worked out very well. Besides the power, sort of renewable power aspect to the smelting business, right? Southeast Asia as a whole, and definitely Sarawak, actually sits on the crossroads of a few trading routes. So if you think about manganese ore coming from South Africa, Australia, when they are selling ores, shipping ores into China, right? Actually, inevitably, you will cross this bit of sea. And we very often take shipments from miners, en route to China. And likewise, when we sell, there are sometimes opportunities to, so do a discharge in Sarawak and then discharge the rest of your material in China. So logistically, it's very convenient. We are also just 7 kilometers away from the port, so that's super close compared to a lot of larger countries where the plants can be quite far deep inland for whatever reason, right? Whether it's close to raw materials, close to coal, where they then build coal-fired power plants around these deposits. So that's not the case for us. We are right next to the plant, right next to the port. And we also have access to container shipments through the Bintulu port. So with that, then you get global projection effectively. Next slide.
Adrian, before that, there is a few questions. So Eddie here is basically just wondering, is PMB Tech and Press Metal basically your neighbor in Bintulu?
Yeah.
Do you guys share the same cost advantages?
Yeah, well, they are like 5 to 10 minutes away by car. So, I think because we are in quite different industries, for aluminum at least, I can't say what the factors are, but for silicon, right, and actually just underlying the common thread underlying all these is that the things that we produce are power intensive, right? So at the core of it, the renewable nature of the power and sort of the cost effectiveness of the power prices from Sarawak underscore that sort of competitiveness. But beyond that, I can't really say much for aluminum.
Yeah. And Adrian, I think in the previous slides, you did mention that there are 16 furnaces in Sarawak, and there is one in China. Is it? Is that correct?
Right. So there are 16 furnaces in Sarawak and 2 furnaces in China, 2 smaller ones.
I see. And on this 16, I'm just wondering, are they like interchangeable? So say you want to do FESI one day and you want to do manganese alloy another day. Is it interchangeable or?
Yeah, that's a great question. Actually, all of these furnaces were built for ferrosilicon, so FESI. And then along the way, we decided to convert 6 to manganese. And that's because I think the idea was always that having a good product mix would be better than just having all 16 furnaces running on silicon, right? And at the end of the day, I think we started off as a sort of manganese ore company, so that actually plays to our strengths. So to answer the question, right, it's not difficult to convert the furnaces to produce either one, but it does take some capex and some time. So, for example, if I'm only producing alloys within the manganese family, right, then it can be changed quite quickly, say in a number of days to weeks. But if I'm going to say move from manganese to silicon completely, right, it takes some time. And the reason for that is because the melting point of manganese and silicon is very different. So if you imagine the furnace, right, has a rated power capacity, you can only deliver, say, X amount of power per day. And that X amount of energy, right, can only melt and smelt, certain amount of tonnages. So actually for manganese, the output is a lot greater in terms of volume because of the lower temperatures required, the lower energy required to smelt it. So the conversion actually requires some changes to the layout, civil works, basically, layout of the furnace. Yeah.
Okay, understand.
I do have a question, actually. In your previous slide, I was looking through it and I noticed that one of the items that is not as, in terms of the cost breakdown, that is quite different among the countries is actually the reductant. And do you want to explain a little bit, this is mainly for ferrosilicon, and why is there such a difference between the country?
We can go to the slide. Yep. Yeah. So reductant is can't quite see the color. It's either pinkish.
It's the pink one. Yes, the pink one.
Yep. Yeah. So for Malaysia, right, we get our reductants from China. So it's semi-coke, mainly semi-coke for ferrosilicon production. It's a kind of char. So basically it's just thinking of the best way to explain it. Think of it as something like coke, like metallurgical coke used in steel making, right? But of a lower quality. Okay, so because we get it from China and it's sort of exported out of China, there is no sort of regional producer of semi-coke. So that's why that cost component is a bit higher. I think for the rest of the countries, right, for China definitely is very low because the plants actually, there are a lot of integrated plants in China where they may say make coke, and at the same time they have even lower quality coal to run a power plant, and then they use both of these inputs to produce ferrosilicon, right? So it's very sort of the plants are located where the resources are, whereas for us it's very deliberate, right? We are sited where the cheap hydropower is. And for other countries, I think like Brazil and Russia, likewise, you have a similar situation. In Brazil, I think they have quite good access to charcoal. It's again domestic production, and for Russia, likewise, coal deposits, are close to where plants are. So that's that explains the difference. I think over time, what will happen is as time passes, we will try to sort of localize the raw materials. So develop that supply chain ourselves and say develop the if need be, sort of eventually produce that. But then that's that will be years to the future.
Adrian, yeah, sorry.
Yep.
On this, you mentioned that there is a sustainable producer, right? And I think everybody sort of like understand that ESG plays a major role. And I believe, I'm not sure if, let's say, China and all the other nations up here, they are also doing hydro, or do they use sort of like a coal plant for their energy consumption?
Yeah, well,
Is that how you're different in some sort?
Yeah, so I think if you look at Asia, right, the countries that are in the cost comparison, the dominant suppliers for ferrosilicon would be Russia and China, and let's just say that it's not really, the power source is not really the most environmentally friendly. But if you look at, say, Norway and Iceland, Iceland, for example, I think I understand that it's largely geothermal. So, that is a renewable source. For Brazil, quite a big chunk of production in Brazil runs on hydropower as well. But Brazil is sort of a swing supplier in Asia. And, Iceland, I think now, so the company that is based in Iceland is focusing on sort of super high-end, high purity ferrosilicon, as well as silicon metal. So, it's not really. So I think as far as the Asian market is concerned, we are the ones that are really looking at the sort of ESG angle to supplying ferrosilicon. Yeah, and I think, sorry, to answer the question about ESG, right? So now that we have completed our dual listing on Bursa, we will start to report what do you call that, the sustainability report from next year, and sort of start setting, I guess, these targets as well. So it's definitely something that we're focusing on, but I think we'll address that in detail probably sometime next year.
Okay, sorry, maybe I'll just take one more question before I let you continue to
go for it.
Present. Yeah, so Jason is asking, a lot of companies in Samalaju may be competing to get enough power capacity from the state government. Do you guys have sufficient power for your operations, and does it limit your operation?
So the short answer is that it's not limiting our operations. I think even with the expansion plans, I think we have some idea of how the entire sort of power balance will work out. So I think we're fine.
Okay.
Yep. So, okay, in this slide, right, I think if you look from, actually, we've covered most of the content. So from the first row, right, manganese ore and high purity quartz. So those are the raw materials. Then we move on to the products and so on and so forth. But I think maybe we can just touch a bit on our customers. So, these at the bottom left corner, these are some of our just a snapshot of our customers. And most of the people we sell to are sort of the top, say, 3 to 5 steel mills in the respective countries, and that really has to do with the scale, because at our scale, right, I think like I said, we're probably somewhere in the top 10 in terms of size. It only makes sense to sell to these companies. So just to give people a sense of like how much alloys are how much alloys are consumed in the production of steel, I think sort of very, very rough rule of thumb to use is about 1%. For manganese alloys. So what that means is, for 100 tons of steel that you produce, you would need 1 ton of manganese alloys. So combine all sorts of manganese alloys. And for ferrosilicon, I would say about 0.4%. So for every ton of steel that steel makers make, they would need about 4 kilograms of ferrosilicon. So, then it becomes a question of how do we optimize our sales. And so, we usually sell to the top 3 to 5 steel mills for each country. So I think there was a question.
It's basically something that you're answering for your
okay.
customers and peers.
Yeah.
Maybe you can touch on your peers then.
Yeah, for peers, I'll talk more about that in the market sort of overview. But suffice to say, I think for ferrosilicon in Asia, the competitors are mainly China and Russia. And for China and Russia, I think there are 2 or 3 companies that sort of dominate the sort of production landscape. But so for China, the main producer is Erdos Metallurgy, and in Russia, it is a company that's based in Chelyabinsk. the name of which I can't really pronounce. But yeah, so that's for ferrosilicon. For silicomanganese, I think there are quite a lot of companies that have been in the manganese smelting space for a while. So in the region, I think the dominant sort of supplier would be Indian producers. They are quite diverse. There are quite a lot of them. They're not small, but they're also more or less, of similar size. So there isn't really one giant producer in India. Then I think, for us in the region, the other producer that's quite close would be South 32. South 32 is a sort of commodities company that was spun out of BHP Billiton, and but they've actually just recently divested the entire smelting asset. So they're exiting that business. In Japan and Korea, there are also smelters that are very old manganese smelters, and they're still there because largely. By and large, I think they are sort of related to steel mills, so people do keep them around for strategic reasons. So, I think globally there are a lot of other companies. So, for example, in Europe, I would say point to Elkem, that's a silicon company, and the one that I was mentioning based in Iceland. And for manganese, there's Eramet, the French company. Partly state-owned, and they're only in manganese. And there's another company, Ferroglobe, that is involved in both silicon and manganese alloys, but they have no mining assets. So, in a nutshell, I think those are our peers.
Okay.
Yep. So moving on to the market review, right? I think it has been quite a crazy year this year. So, I think a lot of people have been throwing around terms like commodity, supercycle, and so on. But really, it's just demand and supply, right? So I think the market cycle sort of reached a low around Q2 of 2020, and that was really when steel mills started cutting very, very aggressively in the region. And everyone and anyone who had material was trying to liquidate, even at the expense of paying super high freight. Then sort of moving on to end of 2020, right? I think that was when steelmakers started realizing that, hey, we actually do have an order book, we do have a production plan, and demand seems to be coming back. And of course, China led the pack, right, during the period in the second half with all the infrastructure spending and steelmaking, sort of that came roaring back. And so prices started increasing, and you will see that actually around, so the the circle mark 2, right? China actually in the past had discouraged the exports of ferroalloys because it is a very energy intensive industry, and they are basically effectively exporting power, right? In a sense, because it's coal that's coming from, say, Inner Mongolia or Ningxia, or what have you, and producing that into a material that can be exported readily. So they've always sort of discouraged that, but they became quite serious in April when they pushed the export tax for ferrosilicon from 20% to 25%, and then we started seeing provinces come up with power restriction regulations. So for example, in I think Feb or March, they suddenly came out with okay, this is the Q1 power quota, and all of a sudden everyone had to cut because they only had 1 month to meet the quota. So this happened on and off, right, until I think more recently across the board, China started having serious power issues. Really sort of a perfect storm. I think there are a lot of factors that probably won't go into, but the long and short of it is that a lot of smelters are actually now facing a situation where they really need to shut for extended periods of time, and including our own smelter in China, Qingzhou, right? That we've also been affected by these sort of ad hoc stoppages when they think that the power grid is going to peak. They will tell everyone to sort of shut load and just stop for a few hours. So a confluence of all these factors led to really ferrosilicon prices topping, I would say, right now the transacted prices would be something like $2,000. First half average was 1586. All right, so historically, I think we've always shared that the cost of production does vary and swing depending on the ringgit, depending on cost of raw material, but invariably it always falls within, say, a $900 to $1,000 range. And right now the selling prices are, on a CIF basis, $2,000 per metric ton. So it's really a historical high. So that's it for ferrosilicon. Not sure if you have any questions at this point.
Maybe after the manganese and
yeah, sounds good. Okay, so for manganese it's a bit more complex because we have the ore and the alloy as well, right? So the reason why for ferrosilicon, you don't have this silicon ore price trend is because quartz is it's just available everywhere. So there isn't really a sort of commodity price tagged to quartz. It's more of on a cost plus basis. Whereas for manganese, obviously, so on the chart you have the ore price. That's the reddish orange line, and we have the manganese alloy price. So here we chose the Japanese silicomanganese price index to represent that. And if you look before 2021, right, they've always been sort of correlated on a month-to-month basis by, say, 80 to 90%, I would say. And so what that means is, they move very closely together, and it's almost always possible to pass on the price change from the raw material to the end user. And as far as we are concerned, as far as the smelter is concerned, that means that the earnings is very stable, right? You are really just earning the conversion spread between the raw material and the finished product. So, I think that it's really one of the main draws of producing manganese alloy. But if you look at 2021, these two things, the correlation is completely broken down. So the finished product has just continued climbing all the way, whereas the raw material, manganese ore, right, has not really moved. It's sort of moved up from January 21, but nowhere near the levels we were seeing for the finished product. So I think this really reflects a bit of what I was saying previously, where steel production being very high is pulling up all the raw materials with it. So iron ore, coke, ferrosilicon, and for the case of manganese, manganese alloys. But the raw material to produce the manganese alloy is not really short globally, right? I think iron ore, we had a situation where in Brazil, a lot of factors sort of limited the export of iron ore, and that sort of drove up prices. But for manganese ore, right, I think all majors are producing normally, and in fact, sort of trying to increase production this year. So that sort of explains the gap. And at the same time, for demand, right, I think for manganese alloys, it's really a sort of spectrum of products. At the super refined end, right, there is a shortage of EMM, electrolytic manganese metal. So there's also sort of a cascading substitution effect all the way down to the sort of basic vanilla manganese alloy. So that sort of has caused these prices to really dislocate. So I think we can probably take questions on pricing of market here.
I have also a question more related to the operations between manganese and ferrosilicon, right? So from an operational standpoint, what would you say are the big differences? And the second one is, as an operator, right, which one gives you more headache?
It's okay. So different kinds of headache, I would say.
Okay.
You want the headaches from. So for manganese smelting, right, I think getting the blend right is very important, because if you get the feed chemistry correct, you can lower your unit power consumption, for example. You can make the tapping process, recovery process more efficient. You can increase the, because we still produce a slag, right? So you can try to minimize the amount of manganese that's left in the slag in the waste. So, and when you blend these things, then manganese ore, it's a sort of a spectrum of prices from the most premium ores to the cheapest one. So then how do you get the optimization right? I think it's very important for manganese. In terms of operations, it's a higher volume game. I think it's almost double the output from ferrosilicon, right? So getting the logistics and all that right also is another challenge, but that's, I guess, relatively straightforward. For ferrosilicon, because silicon, like you may know it, quartz only melts at a very, very high temperature. So to get the temperature high, to get the reaction going quickly and reduce the SiO2 into Si, right? Metallic free Si. That is really where the challenge is. And I think when we started production, because we've only had experience producing manganese alloys in China, so for the first year, I think we were sort of finding our feet in producing ferrosilicon. So that, I would say, is where the challenge is, and sort of then choosing the right reductants to complete the smelting process very quickly without sort of creating problems within the furnace, because within the furnace, there's no way you can look at what's happening, right? You can only sort of guess at what reactions are happening through temperature probes, through the voltage and current through. So it's 3 electrodes,
right.
And trying to figure out actually what's happening inside. Do I have too much carbon? Do I not have enough carbon? Has the reaction zone moved? So on and so forth. So I think that's the challenge for ferrosilicon. So they're quite different in terms of operational challenges.
So just to follow up, right, based on what I hear, and correct me if I'm wrong, it seems like because of the heating of quartz for ferrosilicon, my assumption is that on a relative basis, the energy requirements are higher for ferrosilicon compared to manganese. Am I right to say that?
Yep, that's right. That's absolutely right. Yeah. So it's about 8,800 kilowatt hours per ton of ferrosilicon. For manganese, it varies. So I would say something like 3,600 to 3,800 kilowatts per ton. So very simply, right? Actually, if all else being equal, if we're just looking at GP, say I'm making $150 GP per ton, right? I would be doubling my profit just producing manganese. It's a very, very sort of naive and simple way of looking at it, but there are periods in history where that remains true for a long time. And so, I think part of what we sort of share with shareholders and investors as well is that while it is good to have both, I think when we do, look back at the data, right, and look at it from a per kilowatt hour of power utilized, because that is, sort of what the bottleneck is, right? It pays more to smelt manganese alloys for the reason I just shared. And this is, by looking at, say, the last 5 to 7 years consistently, I think that has been the case. Although now ferrosilicon prices, both prices have sort of gone through the roof, I think fundamentally that's probably what will remain true in the years to come.
Right. Yeah, I have more questions, but maybe, let's move on.
Yeah, sure. Is
there anything from the floor, Rondi?
Yes, I think, maybe I'll just ask this question now. I mean, I can ask later on, but I'll ask it now since it's quite relevant. So Wei Xiang is asking this question, which sort of like tie up with a lot of other question. It's with regards to basically the sale versus pricing and revenue recognition, right? So just now you mentioned that, I think your slide mentioned in the first half of 2021, what is the average selling price and all that. So I guess the question will be something in the region of what are the sort of like percentages that you sell on a forward contract basis against spot, and what is how do you sort of like price your customers? Is it like on the forward basis? Because I believe that is going to be the case that people are going to order in advance and stuff like that, right?
Yeah, definitely. So I guess there are a few questions to unpack here, right? So there's a question that we often get, which is how do you even check the selling price of ferrosilicon and silicomanganese? So we rely on industrial publications. So for example, S&P Platts, the metals edition will publish these alloy prices. Fast Market Metal Bulletin also publishes these prices. If we're looking at China, sort of ignoring the fact that China has this export wall, if you want to look at the RMB prices in China, you can actually look at the futures exchange, Zhengzhou exchange. And so you will be able to see those prices. So to the extent that China is setting the price, you can just sort of multiply 1.25 for the export tax and use that as a proxy for the USD price. Moving on to how we price the contracts. So in a sort of typical physical commodities trade, right? So if I'm looking at say a spot price of $2,000 today, right, and my next delivery available say is M+1 or M+2, then that's when the revenue recognition takes place. In two months' time or so. But today, in today's context, because of this, just the overall tightness in the market, I think. So right now, actually, we are wrapping up sales for the year. So September all the way to December, it's more or less done. So that recognition, then revenue, the prices that we are sort of concluding today will only be recognized then at that point in time when the shipment leaves. In terms of how we actually manage sales in general, right? So I think rule of thumb to use is 50-50. 50% would be on long-term contracts, so and 50% on spot, right? So the spot portion can be M+1, M+2, M+3, depending on how the market is and what customers are willing to accept. The long-term contracts, inevitably, it's the majors that will sign these kind of contracts with you. So, for example, for us in Japan, there's JFE Steel, and when they sign a long-term contract, it would probably be based on a formula that's based on one of these industrial benchmarks. So S&P Platts, say, adjusted for freight or adjusted for some discount, 1%, 2%, then that's then price forward. Which is not to say that there aren't majors that will buy on a fixed price, but because of the volatility, I think by and large, most people would buy on some kind of index. They may say buy on a quarterly basis on a fixed price, but probably not longer than 3 months. So I hope that answers the question.
So would it be wrong to say that 50% of your sale in December for FESI would be based on today's price of $2,000 US dollars?
50%. Yeah. So that's more or less right, except that we've been selling, say, incrementally, sort of creeping up the December sales volume, say in the last month or so. So then you have to look at, like, say, the last month, what the average prices look like. But yeah, I mean, that's not too far off.
Okay. All right. Yeah, let's move on first, Adrian.
Yeah, sure. So Southeast Asia, okay. So this is interesting because when we started this plan, right, we were looking at so sort of rewind to, say, 2010, right? We had the plan in China for, say, 5 or 6 years, but then China decides that it's not really interested in exporting ferroalloys. So we were looking at, say, okay, what's the next place that we can put out a ferroalloy plant, right? So then we looked at JB, we looked at Vietnam. Then Sarawak came along with the renewable power, attractive prices. So that was the decision-making process. But if you look at Southeast Asia today, right, the amount of steelmaking capacity that's just grown in the last 5 years has been quite incredible, I think. So I think that probably the audience might already know this, but I think by our own reckoning, right, from 2015 to date, there has been more than 25 million tons of capacity built in Southeast Asia, and these are customers we supply to, right? So in Indonesia, there's the Morowali Industrial Park, where Tsingshan has the world's largest stainless steel maker has a plant there, sort of co-sited with the nickel operations. Then in Malaysia, right, there's Alliance Steel, Chinese investment. In Vietnam, there is Formosa. That's from Formosa Plastics from Taiwan. And there's the Hofat Group, so local Vietnamese company. So it's been quite incredible. I think we had not expected that we would be mainly selling to Southeast Asia when we started the plant. if you look at the contracts that we signed back then, right, we signed contracts with the Europeans, Japanese, long-term offtakes, but there weren't any sort of major producers at the time in Southeast Asia. So I think if you look at the capacity that is supposed to come online in Southeast Asia, right, that would be, you would require multiple plants of our size to supply the amount of alloys that they would demand. So, right on our doorstep, Hebei Xinhuan steel, I think, was granted sometime last year. I can't quite remember when, but that's they planned for 10 million tons, right? So 10 million tons. If you just take 1% of that, that's really a significant chunk of our output already. I'm not saying that we'll sell all to them, but just to give us a sense of scale. So I think right now a lot of the material is exported. Southeast Asia as a block, we are not really consuming that much steel per capita, right? So if you look at say Malaysia, can't quite remember the number, but something like 300 kilograms per capita of steel, right? Compared to say East Asia, say Japan, Taiwan, Korea, China, that they're several times higher than what we're consuming in this part of the world. And Malaysia is already fairly urbanized and sort of industrialized, right? If you take the entire Southeast Asia as a block, as we sort of emerge as the urbanization process sort of goes on in the next 5 to 10 years, I think this will accelerate much faster. So I think, all in all, Southeast Asia, Africa, and are really, say, the last few regions in the world, really, where you can expect sort of double-digit steel consumption growth. So I think we're just very lucky to be here. It was not by choice. It was not sort of planned, but it's a sort of fortuitous. Next slide.
So I mean, so Adrian, you'll be looking a shift towards more customers in this part of the region going forward, lah.
Yeah, for sure. Yeah, for sure. And I think it already is, slowly happening. I think if you looked at our sort of revenue contribution pre-Sarawak operations, right, which was before 2014, you would see that because we only, if you think back at the sort of flow chart, right, we were mainly a manganese ore company. We only had manganese ore as a main revenue stream. So manganese ore, most of the smelters are in China, so over 80 to 90% of the revenue would come from China. But whereas today, it's much more diversified. I don't have the breakdown now, but I can easily look that up in our annual report.
Okay.
Yeah. So I think all in all, with all that said and done, this is just a quick snapshot of the company now. I think what's important to note. A lot of people often ask about the debt level, and so all these numbers are denoted in Australian dollars, and so a vast majority actually of the total borrowings, about 250 million US, is actually the project finance. So that's a syndicated loan that we took with project finance lenders to build the Sarawak plant. So it's actually ring fenced at the asset level. It doesn't go up to the group OM Holdings at large. But we have actually been paying that down quite regularly. So in a couple of slides, I think you'll see that. So balance against that, right, sort of steady debt reduction, we also want to pay sustainable dividends. So I think we've always said in the past that we aim for about, say, something like 20 to 30% of profit after tax to be paid out as dividends. And so while we don't really have an official dividend policy yet, that is what we intend to pay out, basically cash flow permitting, and also reserving funds for capex and so on and so forth. So that's it. Yep. So okay, we have just announced our first half financial results, and so in spite of the operational challenges, I think with COVID, I will talk about how COVID has impacted us towards the end. We managed to sort of improve our profit after tax attributable to owners to 17.4 Australian dollars million. And so that's a 30% increase from what we did in first half of 2020. So, I think if we look back at 2020, I think for Q1, it was really just realizing sort of pre-COVID normal sales. And then Q2 was really when I think we felt the impact in our markets. So, these earnings are based on, based off EBITDA of 63.4 million Aussie. And we generated 23.6 million from operations. So, if you look at the sort of gap between cash flow generated and the EBITDA, right, that's really what's driving those numbers apart is the build-up in inventory. And that's because we had to stop our plant for about a month or so in June, during the MCO and then with positive COVID cases. So actually stopped production for about a month and ran up, raw materials and as well as power inventory, right, from our agreement with SESCO, the state power company. So, that sort of explains that difference. And, with the cash generated, most of it went back to loan repayments. Part of that is actually a revolving facility that we draw for our raw materials. But of course, the main chunk of that is towards the project financing facility. Next slide. Yep. So you can see from the chart on top how the GP margin is recovered. So I think in the first half, for Q1, we were really sort of still operating under 2020 prices, the end of 2020. So that really, I think we only really saw things move very quickly in Q2 of this year. So at 18.9% GP, we are just a bit shy of the 20s level in FY 17 and 18. But I think, in those years, we were close to 100% operation. Whereas today, I think we're running at something like 75% of capacity. So that sort of explains the difference. And also not forgetting the stoppage that we had for 1 month in June, right, which really limited the sales volume in June and July. If we look at the segment breakdown, right, I think historically you can see that we've had contributions really quite evenly, I think, across, the three pillars of the business, right? So for mining, mining had a great year in 2018, smelting as well. And what we call here trading is really more like the distribution business where we sell the final products to customers. And for the first half of 2021, I think smelting contribution really increased quite a bit from the last 2 years. In fact, from 2019 and 2020, smelting didn't contribute as much. But you can easily imagine from the pricing that I shared earlier, that really drove smelting contribution. While we had recorded a negative contribution for mining. And there are a couple of factors for that. So first of all, I think as we approach the final year of mining, right, where we're running out of, so in a mining operation, there are many pits that you sort of blast and then dig material, and then you sort of go through a separation process, beneficiation and blending. You run out of options because you're reaching the end of a lot of pits. So that and the wet weather, I think in Australia pushed costs up a bit. But really the main driver for mining, right, was freight actually. And so to put things into context, I think everyone probably is aware of the huge sort of container congestions. There are not enough vessels in the world bringing material around. To put that into context, right, when we look at the price of ferroalloys, it's in the thousands, say $1,500 or $2,000, and freight is like what, $30 per ton. So it's in the order of magnitude of about 2 to 3% of the value of the product. But for ore, right, or say 1 unit of manganese DMTU is say $5. Freight could easily be $1 or more, right? So it's like 10-20% of the total value of the product. So it is a lot more sensitive to freight than the finished products. And so that's why, even though ferroalloys, our finished product, really absorb the freight surge and more, right? It could sort of compensate that and still deliver. Manganese ore really was affected by that. And especially, with this happening in the last year of mining, we have actually decided to sort of just cease the physical mining like I shared earlier, and then focus on how we're going to extract the residual value from the material that's left in the mine. Okay, next slide, please. So this was the chart that I alluded to earlier, with bringing our gearing ratio down and reducing total debt. I think I've already shared the numbers earlier on, and that the majority of the borrowings is really ring-fenced at the Sarawak plant level. So from cash generated last year, right, I think just given the fact that COVID has not really gone away, there's still the Delta variant, and just given how unstable things are, I think we are not really out of the woods yet, and so we are trying to conserve cash at this point in time. So out of the cash generated from operations and investments, most of that has been paid repaid to borrowers. To the lenders, and so we actually ended June with a higher cash position than December last year, and the intention is to look at the full year as a whole at the end of this year to think about things like dividend and our capex and so on and so forth. So actually, the capex that was supposed to be spent this year, actually a lot of that has been deferred to next year. Next slide. So. Another slide that I alluded to earlier. So I think the audience might recall that we have 16 furnaces, 10 for silicon, 6 for manganese. At the end of last year, right, because of the demand situation, we actually put 4 of the ferrosilicon furnaces on sort of a care maintenance. Basically, we idled them, and we were looking to restart those this year, but the situation, unfortunately, has not really improved. So right now, we're still running on a sort of 6+6 configuration. You will recall that for most of June and parts of July, actually, we were closed because of COVID. And it was only towards the end of July where we really picked up production again, back to 12 furnaces. So I think, all in all, we will try to sort of bring all production back online as quickly as we can. But to add to that, we also have this plan to convert 2 of the silicon furnaces to manganese, right? So I think Rondi asked us earlier whether it's possible to convert. So yes, it's possible, and that's our plan as well, because of the fact that manganese alloy smelting will generate more earnings. If you look back at the historical numbers per furnace, per kilowatt hour. So the final configuration after conversion, we plan for 8+8 sort of configuration. But of course, how we get there from today is really, the hurdles. I think the challenges that we have getting skilled workers back into Sarawak, right? And the reason we have to do that is because a lot of the frontline operators in a furnace operation, right, they are directly managing power, how you're feeding power into what's basically like a sort of pot of lava, right? And so you do need quite a lot of experience to do that. And, a lot of the experience, so metallurgical workers are usually in China. So that's where our sort of skilled workforce comes from. And I think right now, given the level of vaccination in Sarawak, I think we're starting to see the mood sort of change. So hopefully in the not too distant future, we will be able to get these workers back into Sarawak, as well as the contractors for to complete the equipment installation to convert the furnaces to manganese alloys. Okay, so in terms of operational performance, right, for the first half, so you can see the production numbers in the bars there, and so we've resumed, output and production guidance here. So I think all in all, if you look at ferrosilicon, we're looking at something like 100 to 120,000 tons for this year, and for manganese, we're looking at about 230 to 250. And for manganese ore, the reason why it's higher than the last 2 years is because we're really just trying to compress the mining activity and produce everything that we can and sort of end mining. And of course, there's that ongoing sort of optimization and rectification process for the ultrafines plant to try to get, whatever residual value we can get from the mine. Whereas for smelting, ferrosilicon, I think, fell from the last 2 years because of this the idling of the ferrosilicon furnaces. And yeah, I think that's essentially it. For manganese smelting, right, the numbers will be both coming from Sarawak and China, but the contribution from China is splotchy. It's kind of on and off, so that's not really the main driver here. Next slide. Okay, so I think we're almost at the end of the presentation. It's actually taking quite a long time, but considering that OM Holdings is really a sort of vertically integrated company, right? We start from mining all the way through to processing. It's no surprise that the growth plans really involve both legs. So if you look at the raw material development, actually we have 2 sort of joint venture exploration projects in Australia. Of course, keeping in mind that our main mine is sort of phasing out, so this actually comes in at the right time. So Bria Resources 701 Mile are sort of farm-in arrangements where basically we contribute the capex for exploration, drilling, and so on and so forth, as well as the expertise to be able to hopefully bring these projects into full-fledged mines in time to come. Element 25 is a company. They are it's a new miner. They have just commenced production this year, and we've actually taken the first shipment from them. So we signed an offtake agreement with them. So it's we're not invested in them, but it's sort of different form of partnership whereby we sign. I think it's a 5-year offtake at about 365,000 tons of manganese ore a year, and I think we're very sort of optimistic about the material that they're producing. We've taken the first shipment actually into China in Qingzhou for our Chinese plant, and so far I think everything is looking good. So that's on the raw material front. If we look at the smelting, right? So like I shared earlier, right? I think it's no surprise that we are very passionate about manganese alloy smelting. So we're actually going to increase capacity for manganese alloys. The plan is to build 2 more larger furnaces to sort of capitalize on economies of scale, and we are looking to add about 150,000 tons of silicomanganese. So all in all, right, I think if you look at what we're producing right now, capacity is 200 to 250,000 tons per year. This will add another 150,000 tons of silicomanganese, and this is planned for 2023. And depending on the situation, we could commit capex as early as next year. So that's the middle bit, and the last one is silicon metal. So silicon metal is basically 99% pure or higher or purer silicon. And so if you think about ferrosilicon, it's 75% silicon mostly and 25% iron and what have you. So moving up the value chain, if we produce silicon metal, then we would have effectively sort of diversified away from the steel industry, because silicon metal is actually one of those base metals where it has a lot of diverse applications. So it's used in silicones, ends up in kitchen appliances, Apple Watch straps, that sort of thing. But on the other hand, Silicon Valley, it's called Silicon Valley because wafer chips are produced from silicon. There's raw material for producing chips, and so as well as solar panels actually. So the idea is to move into producing a higher value-added product, and we can do it relatively easily by converting 2 existing furnaces to producing silicon metal with a capex of about 30 million Aussie dollars. After conversion, right, the furnaces will still retain the ability to produce ferrosilicon, so we can actually quite easily switch between the 2. So after we complete that, then the final configuration would be 2 furnaces on silicon metal, 6 furnaces on ferrosilicon, and 8 furnaces on manganese, plus 2 more larger furnaces, the new furnaces that are going to be built for manganese. So I know it's actually quite confusing, but at some point in time, when all these sort of feasibility studies and plans firm up, I think we'll sort of put a updated, forecasted what we think the final output configuration will look like. But I think that's something you can look forward to in future. So I think that should be the last slide.
I do have a question actually. Do you want to finish this first?
Yeah. Okay. So I forgot about the slide. So maybe the most important one. The key investment points. Number one, lowest cost quartile smelter in the region, and by far, really the largest one outside of China in this part of the world, right? Backed by hydropower. 2, we, like I shared, we are right smack in Southeast Asia, and actually, surprisingly, our market share in so I think what we have right there is for the region, meaning Asia excluding China, so it's something like 15% for each product. But if you're looking only at Southeast Asia, our market share can go up to 70% depending on the product you're looking at, depending on the time frame we're looking at. So I think if this must have been 2019 or 2020, right? We were doing something like 50% to 70% market share. 3, commodity supercycle. I think I've already talked about this, and the numbers speak for themselves when you look at the charts. 4, we are vertically integrated, so we cover both mining and smelting. 5, plans I've just shared, and 6, executional track record. I think we strive really to be owner operator, so we're not really financial investors and sort of build a plant and just take a stake in it. We really want to be involved in optimizing the process, really understanding how production works, how mining works, and I think of all the assets that we've had in the past, besides our investment in South Africa, where we're only 13%, we've always been involved in running the plant. So and we've really basically just been doing one thing for over 25 years now. And so I think that speaks for itself as well. So I think that's really the last slide. You can probably take MJ's question.
Yes. So, thank you so much, by the way, for a very comprehensive thing. I'll definitely have to rewatch to understand, but I believe I will finish the session at least 5% smarter, compared to when I started the session. At least, okay. But my question would be one thing. I think there's no doubt that the region you're in is very, very, very interesting because of. I think the first is I noticed one big advantage that you have, and my view is that the industry you're in, which is the commodity industry, is very notorious for having things like price wars and all that. And one advantage I see is the fact that you're in the region, which means that labor cost is low. Correct me if I'm wrong. It looks like that is your biggest advantage when compared to the Chinas and Russias of this world. Or is there something else you would say in terms of cost?
Yeah, actually, I would point to power really as the main driver of competitiveness. Labor is mixed really because a lot of our workers do come from China, for example. So then you have that element that that common element there, and you have to pay for their tickets back. So I think the second largest contributor would be logistics. Because just take, for example, the fact that we are 7 km away from the plant, right? If you are 1,000 km away from the plant, say in China or Russia, I can imagine what the trucking and rail costs would be to move the material back and forth. And say you are an exporter, a manganese alloy exporter, so you are moving something like 2.5 to 3 tons, 1,000 km in, and then 1 ton, 1,000 km out, right? It doesn't really make sense. So as an export, obviously, if you're just servicing your domestic steel players, then it doesn't matter. But if you're exporting, then yeah, it matters a lot.
Okay. So thanks for sharing that. So, if I summarize, basically, labor is not really a big one, but it's really the electricity cost thanks to Sarawak, right? Second would be your logistics. And of course, Russia and China are very big places. So obviously the length of transport is big. Now, my question will be in relation to silicon metal, because you use the word, I can't remember exactly, higher value, right? When you compare it with ferrosilicon and manganese. Now, I don't know whether it's early days and that there is no finalization yet from your internal team, but when you compare the capital requirements for all three of these segments and the sort of returns you can get, and I know it's never easy to know exactly, but if you don't assume huge volatility in the prices of these various metals, what are the kind of returns you're looking at, right? If compared to your existing business, which is manganese and then ferrosilicon. So specifically for silicon, how much better it is in terms of value?
Right. Okay, it's quite a difficult question. Maybe perhaps I'll put it this way. If you look at the two new projects we're doing, right, doing more manganese alloys versus just converting the ferrosilicon plants to producing silicon metal.
Yep.
The ROI is higher for converting to produce silicon metal. It's not one order of magnitude higher, but if all things being equal, prices were the same as today, it would make more sense, to do that first. But of course, we're trying to do both at the same time at this point.
Of course.
Yeah. So I hope that answers the question. And that's really assuming that we're producing vanilla silicon metal, right? So say we're not even talking about the super high end sort of supplying to the supply chain that eventually ends up with chips or solar panels. We're not even talking about that. Just vanilla grade would get those returns. So something like ROI of 30% or so.
30% higher than ferrosilicon.
No, just 30% ROI on the investment to convert the furnaces.
Right. So then in terms of, I know right now operations are about to commence only, but let's say it is already running and you discover that what is on paper becomes reality, right? What do you foresee is a reasonable contribution to your top line when it comes to the silicon metal? What do you think is a reasonable amount?
MG, can I just ask in a different way, lah? Okay.
Can.
I'm just wondering, because you're mentioning that you are going to convert two smelter plants. I don't know what is going to be the capacity, but as we know right now, for instance, a neighbor of yours, PMB Tech, is doing about 70,000 metric tons, if I'm not mistaken. And at 70,000 metric tons, they are basically, I'm just looking into like their first half result this year, right? They're making about 20 million profit. I'm not sure out of the 20 million profit how much is contributed from their silicon metal, but is that something that you guys are striving forward to?
Yeah, I think when you put the question that way, then the answer must be yes. I think maybe let me put it this way. So just sort of converting two ferrosilicon furnaces that we have right now, right? 25.5 MVA. So just apologies for doing this sort of back of the envelope way, but the power intensity for silicon metal compared to ferrosilicon is about 50% higher. So our output now is about, let's say, 67 tons per furnace per day, right? Let's say, so divide by 1.5 times, say, running for 350 days, one maintenance day per month, so on and so forth, times two furnaces is 31,000 capacity from converting the two furnaces. So then, so that's slightly less than half of, what
PMB Tech.
Yeah. And, gives you a sense of scale, I guess. You can look at the numbers for reference, but I don't really know what grade they're producing. And so I think that sort of indirectly answers the question, but that's probably all I can say.
would you be striving for, one of those ultra high silicon, 99.9%, or when you say like a good grade, how many percent purity is it actually?
Yeah, sure. I think, for sure, that if you're in this game, then the idea is to just optimize your raw material, the supply chain, and try to get the impurity levels to as low as possible, right? Either through just buying very good raw material or doing some kind of refining. And actually, the way it's quoted is usually in terms of how much impurity is allowed. So, for example, 441 silicon metal would be 0.4, 0.4, 0.1 maximum impurities allowed, right? So then you sort of work backwards to see what is the minimum silicon that you will get in the product. So yeah, I think the answer is definitely we will try to go as far as we can. And the thing about these kind of niche products is as you reach higher and higher purity levels, right, they no longer get quoted in industry publications because it's so non-standard, right, and so sort of catered for, say, a particular end user's needs. Say a end user really does not need or really does not want a certain element, then you would sort of optimize your supply chains to work around that. So yeah, I think that's the direction we're headed in.
Cool. MJ, any other question on silicon metal?
No. I mean, I do, but I might embarrass myself. But anyway, no, not really.
Okay, I have a question here, and it's quite a recurring question. This is about OM Sarawak, Adrian, right? Let me just try and pull some of the questions here. Okay, so on OM Sarawak, there are a few questions. Question number one here is basically, how does CMS contribute to OM Sarawak? I think for those that do not know, CMS actually owns 25% of OM Sarawak.
Yep.
And so this is one. And there's another question. Let me see if I can see. And basically, what is the revenue and profit contribution from just OM Sarawak?
Right. Yeah. So I think for CMSB, their contribution is really sort of in being a local partner in Sarawak. When we first started the project way back, it's almost 10 years ago, Sarawak was completely new to us. So we found in CMSB, a local company that could manage a lot of the issues that we might have had. And so, yeah, but they're not actively involved in the business really. And, they sort of just hold that 25% stake. As for contribution, right, I think earnings contribution, maybe let me put it this way. The smelter that we have in China now, in Qingzhou, right, it's not a significant earnings driver. If, you compare the sort of prorated profit, right, adjusted for its size, it's nowhere near the competitiveness of OM Sarawak. So, and given the fact that it's smaller, the contribution, I think, is really not material in the segment reporting. So if you look at our first half report, I think we did 40 million. I'm sorry, let me just look at it very quickly. 40 million in smelting earnings, and almost all of that was for Sarawak, basically.
Right. So just one last question about this is there any plan to list or like spin off OM Sarawak?
There are no plans at the moment, but I mean that's an interesting question. That's something that we can always think about in future. But I mean right now there aren't any plans for that.
Okay. MJ, you got any other question?
In terms of the personnel that are involved in your team, right? Which, of course, all of them are important, but which one is, I guess, the hardest to get, apart from obviously the CEO and all that? But is it the chemist? Is it the who is the guy that's hardest to find in terms of quality? Let me put it that way.
Yeah, Adrian, why do we need the Chinese from China so much?
Yeah, exactly. What's wrong with the Sarawakians?
Yeah, no, those are good questions. Yeah, I think, when we started the plan, 2014 September, first tab, we had 20% Sarawakian in the workforce in the plant. But today it's probably closer like 50-60% Sarawakian. So actually we have been trying to and we still are sort of upskilling, so you begin as a sort of operator trainee, right, doing the sort of safer posts. Then as you gain experience and familiarity, then you promote all the way up. And I think the thing is, if the position of, say, furnace superintendent, right, I think we would only trust them if they had like upwards of something like 10 to 15 years of experience, at the front line, manning a furnace, doing a night shift, day and night, basically, looking at the temperature, looking at output, and then, basically keeping it safe. And so really that is really the hardest part, I think, for us to sort of hire and replace. And I think, from sort of this is not a financial impact, but from sort of a human aspect, right? I think it has also been, I think the company is very appreciative that these guys basically have been stuck in the plant for the last 24 months and missed 2 Chinese New Years. So I think we're very very appreciative of that, and of course our local workers as well that have during the MCO and everything just been stuck in the dormitories, right? Reporting to work and really living in the dormitories. So I think besides, say, high skilled labor, say in like you said, CEO, C-level positions, I think the man on the ground is really the secret sauce that makes it work. And then how do you hire and engage them and sort of retain that know-how within the company, and most importantly, sort of doing everything safely, right? Because at the end of the day, it's quite a sort of high hazard job environment, right? If you're just, say, if you're a stoking operator managing the raw material bit, you are always meters away from thousands of degrees of liquid metal. So I think, that's how we think about it.
Right. I want to move on a little bit more to the ore side, because I think a lot of the discussion has really fallen into the smelting side. Now, one thing I was very interested about is that your vertical integration, right, where basically you supply some of the ores to your to the smelting unit. Now, I don't know whether you sell, I guess, the ores to your smelting unit at market prices or below market prices, but how do you all decide, right, when to, how do I put it? How do you decide when is how much to sell to your own units and how much to sell to outside? When is it more profitable and things like that? Because obviously, yes, you can lower the cost for your smelting with the advantage you have in the vertical integration, but that would just means that the ore section of your company becomes a cost center rather than a profit center. So how do you solve that puzzle? At least it's a puzzle to me, maybe it's not.
Yeah, sure. So I mean, the tax authorities actually take that problem away because of transfer pricing. I mean, it just has to be transacted at market prices, basically. And how we usually do the at least a financial analysis would be to say, there are sort of benchmarks for manganese ore, right? So if you assume some kind of discount or formula relative to what the index is saying, then say in a different month, if you're selling to internally within the company, right, then you would sort of need to fall within that range, not the exact number, but definitely fall within striking range. As to how we actually, so that sort of determines pricing. As to how we actually manage when to buy and sell, right? It's basically on an as needed basis, but there are times, commodity prices being what they are, there are times when it is very, very clear that you are just at an all-time high and it's going to fall off the cliff. Then we don't buy internally. We will just leave it in the spot market and see who's willing to take it. Or there are times when you feel like it's about to rally, or say it's at an all-time low, you can't push it anywhere, then that's a good time actually to hold on to more of it in our own smelters. And when I say this, I'm not talking about, say, like huge positions, right? I'm talking about, like, say, instead of buying 1 month stock, I'll buy 3 months stock, the kind of size. And so that's actually a bit of the alpha, and if you're just blindly following the index, the ore index, right, in this case, to use that as an input feed, you're not really gaining the benefits of being fully vertically integrated, I would say.
So another thing really piqued my interest about what you said just now, which is when your internal team thinks that something is high or something is about to fall off the cliff, or vice versa, right? I don't know whether this is something you can share, but how do yours as insiders and industry experts see the prices of these metals? How do you all know or get a sense of it's high or it's low? I really want to understand that.
Well, I guess the answer is demand and supply, really. I think so. At any one point in time, what the majors are producing, right, for manganese ore. And manganese ore is a very, very concentrated product space. You do have a sense of what people are putting out there in the market. Especially if they're listed, then they would announce their targets for the year. Then, in one of the slides, I think for the manganese ore slide, didn't sort of highlight that, but the shaded region at the back actually is the ore inventory in Chinese ports. So that is the most liquid transaction. That is the point of the most liquid transaction, which is ore in ports, but not bought. Basically, it's trader inventory, distributor inventory. So if you look at that, if you look at what people are producing, and you look at what the Chinese steel production, and of course that in and of itself, right, guessing what Chinese steel production would be is very difficult. But just having a sense of that, and then looking at what the implied consumption should be versus what's already in stock versus what people are producing, will give you a sense of whether things are on or off balance, right? So doesn't really answer the question, but that's sort of a sense of how we think about the pricing.
Okay, I think this is where the question on the screen comes in, right? What is your sense right now that in terms of the prices, and of course in the near future? It's never an easy question, I know, but
I think my sense is that the prices are high. I'd be lying if I said that they're normal, right, at this point in time. But then where do we go from here? So I think we actually, I shared a bit in the call earlier today, and also talking to some people in the industry. I think it really boils down to what China is going to do, as what China does and Chinese policy affects a lot of basic materials and commodities. So right now I think China is trying to do a few things, right, on different fronts. So first of all, on the carbon emissions front, I think they're quite set on this target, the carbon neutral deadline. And emissions trading is already available for the power plants only for now, but you can see everything they're doing is just moving in this direction. So that directly impacts ferroalloy producers, because ferroalloy, is a very, very energy intensive process. On the other hand, they're also trying to sort of curb steel production, right? They have come out to say in various policy briefings and so on and so forth that they don't want steel to grow from last year, right? And considering that Chinese steel was the first to recover, was hardest hit, I think, well, not hardest hit, but very, very badly hit in the first half, and recovered very quickly in the second half. And considering that they've already produced so much in the first half, right, asking steel production to remain sort of year-on-year flat is actually going to impact the demand quite a lot. But when you look at the Chinese future prices, right, I think ferroalloy prices, similar to USD prices, are at all-time high. And the reason for that is they are hitting the alloy producers harder than the steel makers, or at least that's what the market thinks, and that's why the futures are priced that way. So it really could go either way. If China really went all the way and sort of crack down on alloy producers, right? There's no plant in the world that will be able to replace that volume, and it could go to the moon basically. But if you flip it around, if they say did nothing to alloy producers but just crack down on steel mills, right? You could have a scenario where China, in spite of the 25% export tax, they can just export freely because there's no demand in China. So, these are the two extreme scenarios. But I guess what I'm trying to say is that it really hangs on the balance, and it really depends on how China enforces these cuts. So far from what we're seeing, right, I think even with the cuts, actually demand and supply is surprisingly balanced in China, at least for some of the figures that we track. So we don't expect it to really go to the moon, and we would expect that slowly things will normalize, because at the end of the day, if you gave it another, say, 2, 3, 4 years, right, if prices really stay at this level, someone else will then build a smelter somewhere else, or we would build we would double capacity in Sarawak, and things will correct. So yeah, that's my sense of where pricing is right now.
Okay. There is, because MJ started the topic on mining, there is actually one question on mining which is which keeps coming up, which is something to do with the accident in Butu.
Yep. Yeah.
So there is basically a question here on the summons on accident from NT WorkSafe in Butu, and the maximum liability of $35 million US. Can you provide more color on this? And is there going to be sort of like a provision on this accident?
Yeah. Yep. So yeah, this is very topical. It just came out yesterday in the news. So what happened actually, for background, was in 2019, so there was a fatality at site in Butu Creek. So it's very, very unfortunate incident where, when you mine, you actually sort of, you blast and you dig the earth away, right? So you end up with something like a valley. And what happened was one of the supervisors was at the floor of the pit, answering a response in response to a call, and when the pit wall started moving, and it was basically a landslide, so he was very unfortunately sort of buried by that, actually just a few weeks ago was his death anniversary, so we had a small service at site as well. But to answer the question, right, NT WorkSafe, which is a sort of a stat board, I guess, under the New Territory Government in Australia, has filed charges. So we've received that, and they've also put out a press release to say that the maximum liability is $35 million. So that is the maximum possible liability if you just put everything together. So we have just announced today that we acknowledge that they put that statement out. But we believe that the sort of realistic estimate of the possible charges is not near that number, 35 million. And actually, I can't speak for financials in this year, right? Because we're not done yet. But last year, at least, when we provided for that in the subsidiary level, at a subsidiary level, but when it went up to the group level, it was deemed non-material. So yeah, it just gives you a sense of the assessment from lawyers and so on. So yeah, that's sort of the color on the incident and the pending summons. But so besides sharing these things that are quite factual already in the public domain, I can't really share more because it's basically we have to it's before the Darwin local court, I think October 12th. So we will have to wait until then to see what happens.
Okay, thank you. No more mining questions from me. MJ, any more mining questions from you?
No.
Okay.
Perhaps we can visit one day. where we can fly. Get our hands a little bit dirty, right?
Yeah. I
Yeah,
mean,
yeah, yeah, for sure.
the site looks very nice, you know, blue color and everything is so symmetrical and stuff.
Yeah, it's because the roof is blue, but
Okay, maybe I'll just ask one or two questions on smelting, some recurring questions, and then maybe one or two questions on financials, and we can call it a day, lah. You know, I think it's reaching 2 hours already. We tried to target 1.5 hours, but it's going to 2 hours again. Yeah. Okay. So there is this common questions about the. I think you touched on this briefly, but Lukman here is asking, what's your current capacity utilization for the furnaces? I think I believe he's trying to say right now after the MCO, and is
Yep.
OMH facing issue on shutting down and restarting back furnaces? And
Yeah.
I think SL here is asking something similar. How easy is it for China smelters to restart?
Yep. Yeah. I'll answer them in order. I think right now, just at the very moment, right, the run rate is about 75% capacity utilization, just based on 12 furnaces divided by 16 furnaces. And, I think realistically, what we're looking at is that we might have to let some of these workers, go back, say next year for Chinese New Year, 1 month and come back into Sarawak. And, depending on when the new workers can arrive, right, and when we need to let existing workers go back and take, say, a block leave, there may be a temporary dip in production at some point in time, right, between Q4 to Q1 next year. If we are super lucky, we get all the visas approved, the workers are ready to come into Sarawak, then we may sort of avoid that scenario. But at this point in time, I think it is in the cards. So, that we'll have to see how that plays out. The second question, how easy is it for Chinese smelters to sort of restart, right? So how it works is when we idle furnaces, right, we don't turn it off completely because it's liquid metal inside, right? If you turn it off completely, it's going to freeze. Then there's no way you're going to restart easily. You will have to blast what is already inside before you can restart. So if we're talking a restart, like the one we had where we stopped for about a month-ish, liquid metal was hot, we could restart in, say, a matter of days and then start tapping immediately. So I think, I would assume that a lot of the furnaces in China are operating under, the same circumstances. But if you say that, if they're forced to say shut for months, right, then that's a completely different scenario. You would really have to sort of incur funds to sort of cool, blast, reline the furnace, and then restart the entire process, which will not, will just take a lot longer than a few days, basically. Yeah.
Okay. MJ, you have any question on this? Smelters?
Nope.
Okay. So maybe this is just one last question on basically FESI and manganese alloy. Wei Xiang is asking, how big is your market share? I think you mentioned this over one of your slide, and he's asking, what is the TAM and what's the growth rate of this particular addressable market going forward?
Right. Okay. I think so. Yeah, it's in the investment highlights slide, but
yeah, right.
So
it's 7.3% to 12.5%.
Correct. Yeah, that's right. So I mean, we went from 0 in 2014 to about 15% for both, and the recent years, and this really is for, like I said, the Asia ex-China market, right? So mainly Japan, Korea, Taiwan, Southeast Asia, and for the case of Ferrosilicon, also includes India, but not for manganese because they are one of the exporters. So it's really hard to say what the growth rate will look like, right? Because it really depends on how fast new capacity is being built in Southeast Asia. So that's really where I see, steel production growing. I don't see it growing in Japan, Korea. I see it growing in Southeast Asia as well as India. So it's sort of a function of how quickly projects are put up. Yeah, that's probably what we can share for now.
Okay, thank you. Guys, I'll MJ, I'm just gonna ask one last question and then I'll pass on.
I also have one last one also. Then
Okay.
yeah, you can ask first.
Okay, cool. Yeah, we don't want to drag it more than 2 hours.
Yeah.
Okay, so Adrian, on this particular question, it's basically about your listing in Malaysia. Let me see. Yeah, so what are the reasons for dual listing? But maybe let me just elaborate on that question, right? Into a few questions. Number one is how many shares are there in Bursa right now? Because what I understand last time when you guys were listing on the secondary listing, it was Mr. Low transferred about 10 million shares. So just want to know like what is the current liquidity in Bursa Malaysia? Secondly is I touched this on the introduction video with MJ just now. How long is actually the process, right, of moving between the shares from ASX to KLSE? Have you actually tried it yourself?
Yeah, the money question.
Yeah, and lastly, yeah, I would just want to know about the arbitrage also. So, and last question from me on this topic is basically ever since that you guys got listed in Bursa, there seems to be a premium in KLSE as compared to ASX. Is this something that you guys expected? And do you think that this spread can be larger in the future? You reckon? Is it due to market characteristics or lack of market knowledge in Malaysia about what you guys are doing? Why the inefficiency?
Yep. Yeah. Well. Okay. Quite a few questions. The simple factual answer for how many shares we have in Bursa Malaysia is 80 million. So we've actually seen. We announced this on a quarterly as well, actually. So in our quarterly. So because our main listing is ASX, right? So we follow Australian listing rules. So we don't have quarterly earnings. We only have earnings twice a year. But quarterly, we will report things like our production numbers, the published prices for the last quarter, and we also report. For now, we are reporting the liquidity on Bursa. So it's 80 million. I think that's about 10% of just over 10% actually of the issued shares. And surprisingly, actually, there have been some institutional funds that have transferred shares over as well. I guess probably because the price is higher on Bursa. And, I think, the other question was the settlement, right? It's T+3. If you get your shares, so far, I think everyone's been asking from Australia to Bursa, not the other way around. But if you get your shares on the issuer-sponsored sub-register in Australia, so meaning it's not held at the so-called central depository equivalent. If it's held on the register and you write in to apply, they'll give you a number, a unique holding number. If you write in to apply and say I want to move these numbers to set an account on Bursa, then it's a T+3 settlement. I have not tried it, so can only tell you it's T+3. But like you observed, it does seem that this gap has been persistent, and so I mean that this creates opportunities for investors. If you have brokerage accounts in both Australia and Malaysia, and the reason why it's persistent, I think, is quite hard to answer really. I wouldn't like to put it down to Malaysian investors being less sophisticated and sort of blame on that understanding of the industry. In fact, I think just the ferroalloy and smelting industry is new really for both Malaysians and Australians. And I think historically we have been labeled as a mining stock in Australia, which because has been true from 1998 to say 2014, right? So I think in a lot of investors' mind, we are a mining stock, and usually the questions that we get from Australian investors, both retail and NST, are about mining performance. They hardly ever look at the segment performance for smelting. So I think it's really hard to sort of put a reason to it, but maybe one possible answer to this is, this is also the answer to another question. I think why dual list, right? For the longest time, when after we started Sarawak, the Sarawak plan, right, we have been visited by brokers and investors, right, and they could never invest in us. A lot of them have mandates to invest locally. So after a few years of visits, I think we decided that why not now that the key asset really of the company is in Malaysia, why not make it accessible for Malaysian investors? And given the interest and the potential demand, and potentially better valuation, why not have this? So I think in a sense, seeing the valuation being higher in Malaysia does not surprise us. Although I couldn't tell you, the exact reason why that is the case. So yeah, fortunately, you have to. That's all I can answer.
Actually, MJ have been, doing a lot of podcasts with different fund managers and all that. I think it's just something. It's just a characteristics of the Malaysian market, Maybe due to I don't know some scarcity of
premium,
stocks,
right?
scarcity premium, all these things.
Yeah.
Right. Not complaining.
Yeah. Well, that's I'm not complaining.
I only have one last question, and I actually can't believe we didn't touch on this, but it has more to do with your clients, right? So, initially I wanted to ask you which are your favorite ones. Obviously, that's probably a bit hard to answer, but not hard to answer, hard to publicly answer, right? Sure, but in terms of dealing with these different, because I'm looking at your presentation and you got quite a few Japanese, quite a few South Korean. These are very power hungry countries, raw material hungry countries because they don't produce their own. I just want to get a sense of what are some of the differences you see between dealing with these clients in these separate countries. What do you see?
Right. Actually, at the corporate level, I think most large steel mills of that class are quite similar. I'm not sure if any of them seeing this will be offended by that, but they're actually quite similar in terms of how they engage with raw material suppliers. The due diligence process, for example, that they put into understanding where the raw material comes from. I would say that, and this may not really be due to cultural or sort of country differences, but because we've had that engagement, for example, with JFE for so long, right? They do a lot of due diligence visits to Sarawak. To the extent that I will only see them in Sarawak, basically, and nowhere else. So that is one aspect of it, and just trying to understand not just what they're buying comes from, but where the raw materials that we're using come from, because they just want to understand that it's really stable and secure. So I guess that's one aspect of it, but it may just be due to the fact that we've had that engagement for such a long time, and they are offtake partners with us. So that's the pair you brought up. That's the one I answered, but I guess. At the end of the day, I think that every country will have its cultural quirks, lah. So there are probably other aspects that I will share after this podcast.
Okay. Understood. All right, Randy, back to you.
Yeah, I think it's already 2 hours. Maybe we can call this a night, guys.
Yeah.
So again, Adrian, thanks for being here with us today. Guys, and to all the listeners, thank you for staying and sticking with us for about 2 hours. You can download the slides of the presentation in Stockbit, and we can always continue discussing about OMH with myself and with MJ also in Stockbit. I think perhaps that's all. Thank you again, Adrian, for your time. Hope hope OMH also will go to the moon, just like all the other metal prices.
No, thanks so much for having me tonight on the MJ. I really appreciate the opportunity.
Our pleasure.
Yeah. And honestly, I'm very, very interested to really look into like the arbitrage trading opportunity, you know, because I mean, I did just a brief calculation. Even today, the spread is like what, about 7 or 8%. So it's very interesting, lah. Maybe MJ, you can look into opening an ASX account just for this purpose.
Maybe, man. Maybe. But what are you going to announce in public now? Is that the thing is gonna?
Yeah. Okay. Anyways, thanks again, guys. Stay safe, everyone. Good night. I'm gonna end it now.
All right, man. See you guys.
Thank you.
Thanks. Have a great evening.